Welcome to No Nonsense. I want to discuss with you briefly today the controversy, the contention of whether or not you need to follow the fundamentals of the corporation in order to trade the stock. And what am I talking about in terms of fundamentals? I'm talking about earnings growth, the financial stability of the company, and all of those things are important, no question about it. But do you really need to follow those things in order to make money trading the stock? Now, I don't want to get into what technical analysis is or what fundamental analysis is. Very, very simply, that question, do we need to know the fundamentals to make money trading the stock? I want to show you an example of what I'm talking about. This is a chart of MegaWorld going back to 2013, and it's one of my favorite stocks and one of my favorite companies because traditionally MegaWorld has traded between its support and resistance, and you could buy at support and sell at resistance over and over again. This goes back to 2013, and you can see that the high price was 6.50 and the low price was 2 pesos. Now, how did the price movement correlate to the earnings per share? The blue columns is the price indicated on the left-hand side. And in 2010, for example, it closed the year at about 2.5 pesos. And then it closed the year in 2017 at a little over 5 pesos. Now it is trading in 2022, all the way at the end of 2022, all the way back to actually below what the yearly close in 2010 was. And the current price is about 2 pesos per share. The red line shows what the earnings per share was. In 2010, the earnings per share for that year was about 20 centavos. Then it went up to about 70 centavos. And right now in 2022, it was about 43 centavos. Now you can see that sometimes the price absolutely correlated with the earnings per share, like in 2014. Other times, the price got ahead of the earnings per share, as in 12 and 13. Sometimes, the price lagged the earnings per share when the earnings were coming down between 14 and 16, and the price gradually went down. 2017, the price shot up, even though earnings really didn't do much at all. And now, earnings were good in 2022, but the price was all the way back and even below the closing price in 2010. This shows, the blue dotted line shows the trend of the price. And you can see the trend between 2010 and the close of 2022, and now currently in 2023, made the round trip all the way up and all the way back down. The red dotted line shows the trend of earnings. And even though earnings for 2022 were actually below what they were or were above what it was in 2010, the price is way below. For that period, the price outperformed the earnings, which is good if you're trading the stock. The thing you have to understand is you do not own the company. You own the stock. And sometimes the stock is going to go up, and sometimes the stock is going to go down. And that's why I'm going to say to you over and over again, buy when the trend is up, sell when the trend starts going down. And you can literally do it over and over and over again. And you really don't even have to know what the earnings are. I'm a kind of a smart guy. I can read a financial statement the same way everybody else can read a Jollibee menu. I understand what's in the financial statement. I understand the significance of those numbers. But I don't follow the fundamentals of a company in order to trade the stock. And that's why I showed you a real-life example of a blue chip stock, part of the index, a multi-billion peso company. Stock market trading, stock market investing is not as complicated as most people would like it to be. In fact, that's part of human nature. We don't like things that are simple, because too simple means that maybe we're missing something. And I'll say it again. It's simple to make money in the stock market. Buy and sell the trends. That's how you make a profit.